Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news. American investor enthusiasm is fading while Chinese investors are pleased with their gains. Firstly, in the US, underlying producer prices increased solidly for a second straight month in May, boosted by a surge in the cost of services. Overall final demand producer prices were up 1.8% in the year to May, but up 2.3% excluding food and oil. Eyes are now turning to tomorrow's US CPI result for May. Markets are expecting a tad less than 2%. Wall Street started positively today, but as the session developed, all those gains evaporated and it is about even now. More companies are reporting earnings troubles due to Trump's tariffs. European markets also ended up much more positively, up about 0.7%. Asian equity markets ended up very positively yesterday. Tokyo was up 0.3%, Hong Kong was up a strong 0.8% on top of the prior day's spectacular gain, and Shanghai topped all that, up an impressive 2.6%. Rumours swept markets there that Beijing is about to unveil expanded fiscal stimulus measures to counter growing external trade pressures that have seen local consumers turn risk-averse. Some analysts believe China could deliver 2 trillion yuan, that's about 440 billion New Zealand dollars worth of cuts in taxes and fees, and allow local governments to issue another 2 trillion yuan in special bonds, largely used to fund key projects. That's a level of new juice which has excited their stock market. The OECD is reporting that growth momentum has evaporated in some key countries, including the US, Japan, Canada, and the euro area as a whole. The downturn in the leading indicators for the US is quite striking, but clearly this hasn't hit them yet. China is starting to ration its exports of rare earth minerals. May exports fell 16%, and it is likely that June's level will be much lower than that. In Australia, mortgage brokers there are fighting to stay exempt from the obligation to act in their clients' best interests. And the widely watched NAB Business Survey for May has come in with a very healthy improvement in sentiment after the less than stellar dip in April. But it's not all that it seems. Yes, sentiment improved, but business conditions measured in the survey slipped yet again. The US 10-year Treasury yield is holding and is now on 2.15%. Gold is little changed today, now just on $1,327 an ounce, and US oil prices are also little changed. They are still just under $53.50 a barrel, and the Brent benchmark is still at $62.50 a barrel. The Kiwi dollar has stepped back a little again this morning and is now at 65.9 US cents, and on the cross rates we're a little softer too at 94.6 Australian cents. Against the euro, we're down to 58.1 euro cents. That eases the trade-weighted index down to 70.5. I'm Steve Forbes and that was 90 at 9, brought to you by interest.co.nz.